Welcome back to the Dividend Diplomats YouTube channel. Got your boys here, Lanny Burt, the Dividend Diplomats. Today, we are going to talk to you about a company that has a 10% plus average dividend growth rate. They are down year to date. They are down over the last year. And let me tell you, when we say this name, you're going to be able to cite off how popular this company is. It is a very high profile, high flying stock that is featured in today's Dividend Diplomats YouTube channel.
No, I like it, guys. Make sure to smash that subscribe button. Give Bert, the Herd, and I a nice thumbs up. It's all about getting back to quality. 2023 ended up over 24% in the S&P 500. Intel cut their dividend. Paramount cut their dividend. And just last week, guys, Walgreens cut their dividend. But you know what's not going to be cutting anything? This company that Bert is watching right now, showing some pretty decent signs that it could be a good time to buy. I know that there's probably a certain price point on Bert's mind right now when it comes to buying this dividend stock right now. So I'm very curious what stock price you guys have in mind as well once we get through the metrics. But man, oh man, I love seeing long lines at this company.
That's right. And both of us love drinking. Not necessarily their product. We love the product that they sell. We are drinking it all the time, every morning. We're not talking about this Michelob Ultra that I've been sipping on tonight. That's not where we're going. We're going on the other side. Maybe put some Baileys in there, some Kahlua inside. If you really want to have a feisty time.
Hey, you Italian? I'm Italian over here. Hey,
Some biscottis with it too. All right, who are we talking about today? Starbucks ticker symbol SBUX. That's right. We are thinking quality here, and that's
yeah.
really the name of the game. Yeah, yeah, yeah. That's what everyone's saying as they're in line here at Starbucks. They're going full LA Night just inside while they're waiting. God, could you imagine how much the baristas would want to just
Yeah.
yes, well, you just put the big noise blocking headphones on if everyone's just saying yeah all they were. All right, so in all seriousness, what happened with Walgreens? They just cut their dividend. We've talked about a lot. We don't need to expand on it. Every
No.
time there's a dividend cut, you think about what went wrong, right? And one of the takeaways is you just didn't necessarily believe in the model for Walgreens. You didn't see the customers in the store. Sure, some of our commenters saying the Walgreens are the most popular places in their town. I never had the same experience. Looking by, it was a red flag I missed because every Walgreens I go to, the parking lot's empty. You cannot say the same with Starbucks. Lanny, do you have that Starbucks experience?
Nope. Actually, we were just driving. Gosh, I forget what day it was. Um, and honest, we were like, wow, I can't believe at this time or at this point that the line is this busy. So, yeah, pretty amazing for Starbucks.
Always packed. And then that's not obviously the only thing, but you look back at their last earnings release, and their last earnings release was great. Their Q4 revenue was over 9 billion. It was up 11% on a year-over-year basis, beating analyst expectations. In fact, they even highlighted in the earnings release it was a record-setting revenue month. So it's the highest revenue that they've ever earned. Same comparable store sales are up 8% globally, 8% North America, 5% internationally. So sales are going up everywhere. So even as wallets and budgets are tightening for people, the Starbucks sales are still increasing, which I think is a very, very interesting sign.
Yeah, I love it. They had GAAP, actual earnings per share of $1.06. If you know, you know. And the fact that how strong the brand loyalty is. I'm not gonna lie, we do have Starbucks Pikes, a nice big bag in our cupboard. There's a Target Cartwheel offer, so it made it a little bit, more
Of course.
palatable. Um,
But when you
but
see
and
it,
then
you see it. Like when you see it, you instantly flunk like, oh, this is a great sale on Starbucks stuff. I'm gonna grab it.
yep, yep, adds back to the dividend that they're about to pay me. They have over 32 million Starbucks reward members, and that's up over 14% from the prior year. And if anybody knows in retail and in consumers, loyalty and rewards are everything, and Starbucks has always had that thing down.
Yeah, and they passed the eye test, they passed the earnings test. They're opening up stores left and right. They have over 20,000 stores internationally. They have over 38,000 stores across the globe, including the US. So they're growing, sales are growing, membership is growing. That is huge right now. But the stock price, Laney, is not growing. They're down 11% in the last year. down only 2.65% year to date to start. So that gets us thinking, is Starbucks undervalued at this time? And how are we going to figure this out, Lanny?
We're going to run through the Dividend Diplomat stock screener, guys. We're going to focus on the price to earnings ratio less than the S&P 500, dividend payout ratio less than 60%. Of course, guys, we're going to look at the history of growing dividends and the average dividend growth rate. Then we're going to lop in there the nice dividend yield as a bonus metric. And Bert, I know you and your wife, you guys own shares of Starbucks. Give us a little bit of background
Oh,
there as
sure.
well.
Yeah, so I was going through this, and I knew my wife had a Starbucks position. I just kind of forgot how large it was. A long time ago, when they were trading in the high 40s, we bought 91 shares of Starbucks. So the market value is over $8,000, it's 8,500 in this position. Cost base is only 4,500. It's one of our largest gains that we have, and luckily it's in her Roth, so that gain's all tax free. This position produces over $200 of annual dividend income, so we receive $208 of dividends annually from Starbucks.
Nice. Gotta
Yeah,
love that. Gotta love the idea
yeah,
of possibly bridging that gap to 100 shares.
yeah. The
You
right
know,
potentially right options.
yeah,
Get a little
get
more
some more
income.
income off it.
It's all in our Roth too, which is the other benefit. So add income.
Avoid those taxes, baby.
Yeah. Woo. All right. So let's run them through here. Their price of their close as of Friday was 92.99. Their forward earnings per share of $4.13. That is a 22.52 PE ratio. So it's not the cheapest stock compared to the S&P 500, but interestingly, when you look at their 5-year average PE ratio, the P ratio is always high. It was a really high number when I looked at it. So I just looked myself. I used my eyes. Historically, they're usually trending in that 25 to 30 PE ratio range for Starbucks. So they're lower than their historical average, which is always high compared to the S&P 500. So I'd say they are still undervalued when you look at Starbucks.
Yeah, I mean the S&P 500 as well is around 25 to 26 times. So 22 showing a little bit of a break here, guys.
Yeah.
But let's dive into that dividend payout ratio. The dividend right now is $2.28 spread over 4 quarters, a 55% safe dividend payout ratio, nearing that 60% threshold. So I'll have to see what dividend growth might be like here in 2024. But based on, the last four earnings release, I think they could step up to the plate.
Yeah, I would think so as well. And that's the interesting thing about them. Speaking about dividend growth, they've increased that dividend for 13 plus years. So they are on their way to becoming a dividend aristocrat, which is pretty sweet when you're talking about Starbucks. That 5-year dividend growth rate is 10%. So it's a very strong double digit, especially when you have their yield, which we're going to talk about in a second. Their last dividend increase was announced in November. So it was pretty recent. It was a 4 cent per share quarterly dividend increase. So it was their old dividend was 53 cents per quarter. Now it's 57. So that's a nice little bump there, Lanny. That's a 7.5% dividend increase right there. So that's very nice for Starbucks.
That is very nice, very strong, very consistent. Been doing it for 13 years. Now, Bert, with that stock price dropping to 11% over the last 52 weeks, that means that dividend yield has climbed up.
Okay.
That dividend yield actually is a little bit higher than that 5-year average as well, Bert.
Yeah, that's right. Their dividend yield is now 2.45%, which is above that 5-year average yield of 1.92%. It's absolutely beautiful.
53 basis points on top of that 5-year average. Gosh, that green cup. Dang it, that logo. I couldn't even find holiday blend this year, guys. So dang you for all you guys buying the holiday blend.
But again, that tells you everything you need to know about Starbucks. So we're just going to put the metrics up here just to
Put them
summarize
up.
them.
Put them up.
So what are we thinking here, Lanny? Honestly, there's no reason why I shouldn't get to 100 shares in my wife's account right now. It's not that far to go. That's what, 900, $800 to $900, depending on the price when we do it. It's an easy
Just
bump up.
you're gonna sell a kidney, on the
Yeah.
black market.
Well, I mean, there's still
Sell
some
one.
things in there. We still have about $300, $400 of Warner Brothers Discovery that's sitting there that I haven't done anything with. Um, Maybe it's time to clean that portfolio up a little bit more and put it in the Starbucks, or even just put in fresh capital. That is an option too.
That's an option, guys. What would you do? Are you guys looking at a certain stock price with Starbucks is $90 per share, the primo stock price for you to buy more shares of Starbucks stock? Let us know in the comments. Let us know if you guys been buying them regardless, or if you already own them in the portfolio. I'm going to raise my hand and say we already do as well in ours.
Yeah, and if you haven't already, subscribe to the channel. Give this video a thumbs up, and remember, if you're not with us, you're against us, Jack.
That was Bert, the Hurt Man, and Lanny from the Dividend Diplomats. Over and out.